Hey everyone, welcome to Make Money Count. Today we're sitting in the studio and there's a question that is on everybody's mind right now. And that question is, what's going on in the Middle East and how's it going to affect my mortgage, interest rates, what's happening in the market? And hopefully you can tell us. I would like you to start by telling us what's happening in a quick,
Sure. I mean, there was this, I printed this thing. There was this really great cartoon in the Globe and Mail. I don't know if you can see it from here. I didn't print it in color because I don't know how to do that. But I think we could just put it up on the screen. It's basically Donald Trump holding a genie bottle that says war on it, and this like big war demon coming out of the genie bottle. And Uncle Sam says, "And you're playing for getting it back in the bottle?" Which is the scary thing, right?
Yeah. Seems like it's spiraling.
Yeah. So, war is going to be an absolutely horrible thing. We're going to see a lot of lives lost. The strategy for Iran is much different from the strategy for the United States, right? Like the United States and Israel are going to go in with billions of dollars worth of equipment and drop $1 million bombs on, the areas of the country that they believe pose the greatest threat, right? Like they're talking about the Navy and infrastructure and targeting people that are within the regime. And Iran's countermeasure is they've got an unlimited supply of these drones, these like suicide drones, which are basically free. And
they're like 20,000 or something.
Yeah,
like that,
and
right?
they will target these $1 million, billion-dollar pieces of equipment or war equipment, and also oil and gas infrastructure.
Right.
And they will create so much instability in the region that it will. I mean, so first things first, it's going to increase. It's already increased oil and natural gas pricing. It will continue to do so. If you want to think of it, like we talk about this all the time, right? Like the market looks into the future.
Right.
Any market, it's a bunch of traders that are gathered around a marketplace, and the price of the items that they are trading are based on the general consensus of the group of traders as to what the future is going to look like. And then the price of that item is dictated by that.
Mm-hmm.
Well, the price of oil right now has shot up because those traders are increasingly believing that the length of time the war will go on in the Middle East, because it's not just Iran anymore. Right?
Yeah. The whole, it's everybody.
So the length of time that this is going to continue is getting pushed out. And we saw it already, right? Like, what did they call him? Pete Hegseth, the Secretary of War.
Yeah.
Like he came out and he was like, it's Trump initially was like, it's going to be a week. Israel and Trump were like, it could be a week or two, could be 4 weeks, could be 8 weeks now. The problem is that you've got this like bombastic leader who like probably went to the negotiating table, was influenced by Israel to some extent. You decide on.
I mean, he didn't say he was, but
to what extent he would never say that
yeah,
he was.
I'm kidding.
And as a result, maybe gets goaded into a regional conflict, a war with Iran. Now we're not exactly sure what the entirety of the reason for that is, other than he suspected that they were going to hit him with a long-range missile, or eventually they would build up capabilities to prevent anyone from actually attacking them because they would have had the nuclear arsenal. All of the regional players were against this.
Right.
Because they realize that starting a war with Iran is not going to be a quick and easy game.
They've been waiting for this.
Yeah. I mean, they've been waiting for this. They've been obviously hoping that this wouldn't happen.
Yeah.
But they're probably more prepared than they were giving credit for.
Right.
And as a result, we are going to see, and like, save for some turn of events that makes this quick and easy, which is so unlikely,
Yeah.
we are going to see a long, protracted war in the Middle East. That Strait of Hormuz,
Yeah.
if you look at the map, pull up a map of the area. If you look at a map of this, of Iran's proximity to, on the other side, Saudi Arabia, UAE, Oman, Qatar. That's not in order of like north to south.
Yeah.
But if you look at it, they're just separated by this one body of water.
River, yeah.
And it's not a river.
Well, I mean, it's a big river.
It's a strait, right?
Yeah.
The kind of top point of that is Kuwait.
Mm-hmm.
But all of these tankers go through there to extract oil and then bring it to the marketplace.
Mm-hmm.
And that's stopping. That's stopped, right? Like you can't get insurance now to run a vessel through there.
Interesting.
And as a result, oil prices are going up. The only thing we've got now is Marco Rubio came out and said that Trump has a plan. He didn't say what the plan is. We haven't heard what the plan is, but there is a plan.
Okay.
So good luck with that.
Building his own strait?
I mean, what do they do? Do they release the strategic oil stockpiles of the United States?
Venezuela?
No. The United States has its own
Right.
strategic stockpile of oil. So do they release that into the marketplace to put downward pressure on oil? But then does that signal to the oil traders that like, oh, wow, the United States believes this is going to be protracted,
For
and
a
as
long
a
time,
result,
yeah.
oil prices go up? Venezuela is not going to solve this. Not fast enough to solve this.
Right.
Not enough oil to solve this. It can't happen fast enough. And, everyone's like, oh, Canada could step in and fill the void. Canada can't step in and fill the void. We can't get our oil to the marketplace.
Yeah.
So oil prices are going to go up. And when oil prices go up, inflation goes up.
Mm-hmm.
There was a stat, I think it was Morgan Stanley, and I wrote it down. So oil prices are $80, roughly speaking, for a barrel.
Mm-hmm.
$65 is where
You went to up like 20%.
Yeah, $65 is where they used to be. A 10% rise in oil prices could lift headline consumer prices in the U.S. by 35 basis points over the next 3 months. Inflation, big time, right? 20% rise in the price of oil, 70 basis points. You know what the funniest thing is? Is like Trump has been begging the Federal Reserve to drop interest rates. This is going to make it extremely difficult for the Federal Reserve to drop interest rates. If you were following along the Canadian bond market in Canada, which I'm sure everybody was, but the bond market reacted right away. We've been hovering in between this like 2.6 to 2.9 5-year Government of Canada bond yield. We're back up pretty close to that 2.9 mark now.
Mm-hmm.
So what does that mean? It means fixed rates are going to go up, short term at least. So if you're sitting at home right now, in the middle of the renewal wave, what should you do?
Lock in as soon as possible.
Lock in a rate. You don't have to take the rate. Just lock it in. I don't care if you're 6 months out and we try to find you a 4-month rate lock or whatever it is. Just get in touch, lock a rate in, and then we can make the decision 2-3 weeks before your closing date whether we're going to take a variable or a fixed rate and see where things are at that point in time.
Mm-hmm.
But if the conflict lasts, the longer the conflict lasts for, the worse this is going to be. And we've already seen little like nods to how bad this could be. Like the deputy governor of the Bank of Canada was in Oslo, where she explained that there's a really good chance that even in a bad economic climate, the Bank of Canada may need to increase interest rates. That's telegraphing us this, right?
Mm-hmm.
Oh my God. It's almost like what else could Trump do to screw up our little mortgage market here in Canada? Like this is going to be a big one. This could be a big one. And I think it's also going to be a big one for his midterm elections.
Right.
Like I think there's going to be negative consequences where the cost of living crisis in the United States is now being exacerbated by Trump not wanting people to think he is weak when his bluff gets called, and making this decision. Like you can't send that much firepower out to the Middle East and not expect to use it.
Yeah.
Right? He was just hoping that he was going to send all this firepower and Iran was going to say like, okay, listen, we're sorry.
Yeah.
But this is not how Iran has ever behaved as a country, right? It needs more diplomacy. Anyways, I just, on a purely economic, fundamental level, there is a real concern right now that inflation is going to heat up. And as inflation heats up, we're going to see fixed rates jump. And I really hope it doesn't mean that the Bank of Canada gets involved and has to raise interest rates, because that would be catastrophic for the already abysmal Canadian housing market.
Yeah.
Catastrophic. But yeah, what's the war mean? The war means increased price of oil, increased inflation. Maybe the loonie will do okay, right? Because, we got oil. But relative to the euro, the Canadian dollar is probably going to strengthen, which means it might be okay to go to Europe.
Good time to go to Europe.
A little cheaper this summer to go to Europe. That's because Europe's got its own problems. Liquefied natural gas is going up in price because the infrastructure in Qatar was targeted by the Iranians. So Qatar just shut it down. And like Europe was getting their gas from Russia before, can't get it there anymore. So they switched to try to get the gas from Qatar, not just Qatar. Qatar also sends gas to Asia predominantly. But taking all that gas production offline is going to increase the price of gas. So inflation in Europe, they're contemplating solutions to try to affect pricing. And that's like, the environmentalists aren't going to like that one. Like fire up the coal plants. Essentially one of the options they're looking at. Anyways, all this to say is, like, before we finish this, look at the price of oil. Look at this chart that I put together for the price of oil. I didn't put together. Look at this price that I found for the price of oil. $65 on February the 26th, and it is now up to $80. Oh, baby. That's huge. Like you said, 20%. It's more than 20%, right? It's more than a 20% increase. And if I were a betting man, which I am, the price of oil is only going higher.
Over $100?
Yes.
Let's do a little poly market.
Yeah. All right. Thank you very much. Arrivederci. Oh, and also in the if you were wondering, regardless of how much sleep you get or how tanned you are, at least if you're me, you will continue to lose the war that is being waged on me by the bags underneath my eyes.
More to come on that and how that affects the economy.
Yeah, because everyone's thinking about their two wars.
Yeah.
All right, thank you.